Hello and welcome to episode 6 of the Alex.Nunemaker Mortgage Podcast for the week of July 18th. In market news, we've seen mortgage rates fluctuating as a result of some hot inflation numbers last week, which brings all eyes on to the Federal Reserve meeting later on this month on the 29th. They're going to release their minutes and they will announce a rate hike, but the question is, how much? Now, if you remember in my past episodes, this is going to be important to get out in front of when it comes to your clients. The Federal Reserve is trying to fight back against inflation, and the tool they have to fight back against it is raising the federal funds rate. Right now, the general sentiment is that it's about 50-50 on whether they're going to raise it 75 basis points or possibly a full 1%, which would be a huge hike. No matter what, again, we know they're going to raise rates. There's going to be headlines later on this month that say the Federal Reserve raised rates again. And to the average consumer, they're going to think that that means mortgage rates went up, when in fact, the Federal Reserve raising rates might actually lower mortgage rates. We saw that literally at the last Federal Reserve meeting. But, we have short memories. Remember, there is no magic lever at the Fed that controls mortgage rates. They're controlling short-term interest rates, and if that is viewed as tough on inflation, trying to shrink the economy, trying to get this under control, which is really what's driving mortgage rates upward, then we could see mortgage rates come down. Don't let your clients get panicked by a headline. And now for your mortgage tip. For this week, I want to talk about credit scores. I've seen this come up a lot recently where a client says, I know my credit score is in, the low 700s. And they're shocked when it comes back 30 points lower in the 600s. So let's talk about what's really going on here. Credit scores are really just the result of algorithms or equations that the industry uses to interpret the data that the three credit bureaus have, Experian, TransUnion, and Equifax. The data at these bureaus doesn't change. But a credit score is the result of taking that information, that same information, putting it into an equation that gives us a score. Now, those equations are proprietary, meaning that companies have developed these equations and they get paid when people use them. And depending upon how reliable they are, they can be adopted by different industries, say mortgage industry, car loan, credit card. And different industries favor different equations because they emphasize or maybe not emphasize certain things. And they'll pay money to utilize those scores because they help reduce lending risk. Okay? So what has changed is that there are certain companies who have said, hey, we can develop our own equations. Same data. We'll just do our own. And maybe this isn't going to be for the purpose of lending, but it's going to be for collecting information about consumers. So they, of course, want to utilize the information that the consumer has authorized them to get from the credit bureaus. So CreditKarma is a great example of this. So they'll say that, hey, we're going to help you get a credit score, and they use an equation or a scoring model called VantageScore, which again takes the same information, same credit bureaus, and it will spit out a score. The problem is that this is not the same equation or the same score that I will see on my end when I pull a credit score because we use different equations. So unfortunately, in my experience, the score that I see is usually 20 to 40 points lower, sometimes more than what someone will see from a free resource, even if it comes from their bank or the credit bureaus. The credit bureaus can still use a VantageScore or one of these other equations, and they often do when it comes to consumers looking into their own credit. So in order for it to be accurate, it has to be using the same scoring model. And now for the quote of the week. This week's quote comes from Zig Ziglar. If you are not willing to learn, no one can help you. But if you are determined to learn, no one can stop you. If I can help you or any of your clients with any questions or pre-approvals, let me know. They can visit me at homeloanswithalex.com. Have a great week.